You've heard that an electric car as a company vehicle is more tax efficient than a combustion engine, and now you want to know how much cheaper it actually is and how to calculate it. Then you are in the right place, because that is what this video will be about. Basically, when purchasing a car as a self-employed person, you need to ask yourself a central question right at the beginning. Namely, do I buy this car privately, or do I allocate it to business assets? If you indeed decide to allocate the car to business assets, then the car belongs to your business. I know it sometimes seems a bit strange, and sometimes as a self-employed person, you also feel a bit schizophrenic when talking about it. This is me as a business, and this is me privately. But let's play with the idea. Let's assume it this way.
Dein Auto ist elektrisch,
but your
dein
logbook is
Fahrtenbuch
not.
ist es nicht.
That's kind of a strange combination, and you should definitely change that. Of course, you are basically right that such a logbook is significantly cheaper than the 1% method, at least usually, because this logbook, meaning a paper logbook, is often dismissed during a business audit, simply because it is not legible, because it was not kept in a timely manner, because it is not complete, and so on. So, save yourself all the work, throw the whole thing away, and get yourself an electronic logbook, for example, the one from Vimcar. This makes keeping the logbook very relaxed. And it's not only cheaper for you than the 1% method, but also it's just like the 1% method and therefore the best solution you can choose. Be sure to check the video description below under the first link. There you will find all the information about the Vimcar logbook. That means you buy a car as a business, so it becomes part of the business assets. Then all expenses related to this car belong in the accounting. So, really, all of them. The acquisition costs, any financing costs, taxes, insurance, fuel, repairs, and so on, everything goes, first of all, into the accounting. This way, you essentially have a huge cost block in the accounting, which includes 100% of the car. However, if you do not use this car 100% for business, which is the case in most instances, because at some point you also drive privately for vacation or shopping or taking the kids to daycare and so on, this means you have a few private trips. Then you have to pay taxes for these private trips. This means first 100% of the costs go into the accounting, and then you determine how large the private usage share of this business asset actually is and must pay taxes on that. This is the calculation methodology for how to do it, and there are two methods for that. The first method is the so-called 1% method. You simply take the gross list price of the car fictitiously and have to tax it once a month. It seems a bit arbitrary, and it is. And to be honest, in most cases, it is also relatively expensive. What is cheaper is that you keep a kind of diary, a logbook, and simply write down each individual trip. This means you write, I went to grandma's once, that was private. I went to a client once, that was for business, and so on. You can write that in such a paper book, but to be honest, I can't recommend it. And then a lot can go wrong with such a paper logbook. In the meantime, there are digital electronic versions of such a logbook. You plug a small device into the car and it simply logs every trip. And then you don't forget to keep the logbook. And then you have an app on your smartphone or can operate the whole thing via a browser. And then you assign a specific purpose to the trips, for example. And as a result, the logbook more or less keeps itself. This is, for example, what Vimcar does. And this way, you can determine the exact usage share. How much percentage you have used this car for private purposes. And let's hypothetically assume you incurred 10,000 euros in costs for this car in a year and you drove exactly 36.7% privately. Then you have to tax 36.7% of those 10,000 euros. It's that simple. And you then record it as an increase in profit in your accounting. So far, so good. So, probably generally known. And this applies to combustion engines, hybrids, and electric vehicles. However, there are discounts for hybrids and electric cars, and quite substantial discounts. And here we are not talking about the 1% method, but the 0.25% method or the 0.5% method. Electric cars are the cheapest. If you have bought an electric car, for example, a Tesla, or an Audi e-tron, you can do it as described. However, you do not have to tax 1% of the gross list price every month, but only 0.25% of the gross list price. The same applies to the logbook, then you only have to tax 75% less. And you can do this if your electric car had a gross list price of under 95,000 euros. Due to this 95,000 euros. This excludes luxury cars, but otherwise all common mid-range and even higher class electric cars are involved. If your car was more expensive than this 95,000 euros gross list price, or if you have a hybrid vehicle, then you cannot apply the 0.25% method, but rather the 0.5% method. That means you have a significant savings compared to a combustion engine, because you only have to tax half, but you must. However, you still have to pay double the taxes for a pure electric car. For hybrid cars, an additional condition must be met. Specifically, your hybrid vehicle must have an all-electric range of 60 kilometers, or from January 1st, 2025, 80 kilometers, or a CO2 emission of under 50 grams per kilometer. If your hybrid vehicle exceeds these limits or falls short in range, you then have to choose the normal 1% method, which means your hybrid vehicle is treated like a combustion engine. And to gain a better understanding of the tax effect, let's take a look at a company car calculator from Vimcar. And for that, I'll take you along to my screen. We are now here at the company car calculator from Vimcar. I will also link it below in the video description. Then let's scroll down here, and here we see the calculator. And here we can also see that we can select the different types of drives. And on the left side, we see the tax effect. So the 1% method and the logbook, and the difference respectively, the costs for the Vimcar logbook. And it ultimately tells us how much one saves if one keeps a logbook, and if one should use an electronic logbook from Vimcar. In this video, however, we mainly want to look at the difference between a combustion engine, hybrid, and Hohn's electric car. And here we first see a combustion engine, specifically an Audi A3. We might switch to an Audi A6. And then we see on the right side, the Audi A6 is significantly more expensive. Not only in the purchase, so the cost basis here at the top is not only higher, but also the taxation. And this is for a very simple reason, because the gross list price is higher. It is now around 70,000 euros. And we will take a look at the whole thing. At 70,000 euros, we would have to pay about 5,600 euros in taxes using the 1% method. And with the logbook, it would be less than half as much, so only about 2,500 euros. Below, you can also set the mileage and so on, but I don't want to go into that in this video because we mainly want to compare the combustion engine to the electric drive. So let's remember, the Audi A6 combustion engine costs about 5,600. If I now change the drive to electric, I immediately see a difference here. There is no Audi A6 electric though. But let's hypothetically assume there was exactly the same car also in the electric variant. Then we would pay not 5,600 euros in taxes per year anymore, but only 3,000 euros. This means we save substantial money here if it is an electric drive. And if my budget for the taxation of the company car was 5,600 euros, then I can now increase the price of the car. Audi also has a real electric car, for example, an Audi e-tron. It is more expensive than the A6, but it is actually cheaper in terms of taxes because it is an electric car. And those of you who are very attentive are now asking a question. Namely, how can it be that with the 1% method, 5,600 euros in taxes come out, and then we reduce the tax base by 75% and change the 1% method to a 0.25% method, and the tax does decrease noticeably, but not by 75%. How can it be that the tax is still so high, still well over half? This is because the tax is not being saved here, but the tax base. And very importantly, this 1% or 0.25% applies to income taxes and to trade taxes as well. This annual tax burden is a sum of income tax, trade tax, and value-added tax, and there is no reduction for value-added tax. That means, ultimately, the component of value-added tax in this amount is much, much larger than if I were to choose a combustion vehicle now. Ultimately, I pay exactly the same amount of value-added tax, but the income tax and trade tax are significantly lower. This is the explanation for those of you who have been wondering how it is possible not to save 75% of the taxes. And honestly, this is also the reason why I find this calculator so great, because you can simply work with the real numbers once. I can play it through, and if the Audi A6 were a hybrid now, I would get an additional question, specifically the question about the requirements. So, at least 60 kilometers of purely electric range and a maximum of 50 grams of CO2 emissions per kilometer. A little reminder, these 60 kilometers will increase to 80 starting January 1st, 2025, so consider acquiring the car this year. And if that is the case and I click yes here, then we also see on the right side that the taxation decreases because then the 1% method no longer applies, but the 0.5% method, and then it becomes a bit cheaper overall. In summary, one can say that the tax savings for electric cars and hybrid vehicles as company cars are indeed very noticeable. And feel free to try it out. You can find the link in the video description below. Feel free to write down the cars you can imagine and just compare the models. Ultimately, one can say that due to the tax reduction, you can afford more car if it is an electric car or, my personal preference, a hybrid vehicle. Regardless of that, it is, of course, not only is the 1% method cheaper, but also the logbook method. We have only looked at this now, but if you are generally facing the decision to acquire a company car, then you should not only compare whether you are buying a combustion engine, hybrid or electric car, but also consider whether you might want to keep a logbook, because we also see below the savings that such a logbook can bring, which can also be quite significant and can sometimes even be much higher than what you save with an electric car. I hope this video was able to help you and answer a few questions. If you still have questions about the 1% method, the logbook, Vimcar, or anything else, I won't be able to answer too many questions about cars, but you can also write those questions in the comments below, and at least for the tax-related questions, I will gladly try to provide you with an answer. Check out Vimcar. Find the link below in the video description. I will also gladly link it for you here. And now you could directly watch another video on this channel. Accounting, taxes, and finance are always worth a video, for example, this one here, or this one here.